Be Wealthy and Smart, episode 973.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about higher interest rates coming and is hyperinflation transitory? Because I've been getting lots of questions about this. Is inflation going to be continuing at a terrible pace, or is it about to cool off? And what about interest rates? Are we going to have lots of interest rate hikes? Are interest rates going to go crazy, or are they going to be moderate and under control? Well, I have some definite opinions, and I have an article I want to share with you about this. So first, let's talk about interest rates. This article comes to us from CNBC and was written by Jessica Dickler. And it says, the days of rock bottom interest rates are nearly over. The central bank will aggressively unwind last year's bond buying sooner than originally planned, after recent reports on inflation continued to show a sharp rise in prices. While the Federal Reserve said Wednesday that interest rates will stay near zero for now, the quick tapering of bond purchases is seen as the first step on the way to interest rate hikes next year. For consumers, the writing is on the wall that interest rates are likely to start climbing in 2022, said Greg McBride, chief financial analyst at Bankrate.com. So basically, the Fed has already told us that they are going to be curbing the tapering of bonds. That's double tapering in Fed speak. And they have talked about 3 interest rate hikes next year. So pretty much the way the Fed guides us is what they generally do. Not always, but usually they try to give us an indication of what their plan is. Because the worst thing for the market is uncertainty. So the more that they can tell us what they're going to do ahead of time and then do what they said they were going to do, the better off it is for everyone. So the article talks about borrowing costs going up and says as the Fed tapers its bond purchases, long-term fixed mortgage rates will edge higher since they are influenced by the economy and inflation. For example, the 30-year fixed rate home mortgage has already risen to 3.24% and is likely to climb near 4% by the end of 2022, according to Jacob Channel, senior economic analyst at LendingTree. So I'm pausing there to say that's what we talked about this year. 2021 was the year to refinance. I was encouraging you to do that. Hopefully you did so and were able to lock in these very low interest rates. It's not too late, however. If you haven't done it yet, I would get after it right away because now we know interest rates are going to go up next year. And the same $300,000 30-year fixed mortgage would cost you $1,297 a month at 3.2%, but if rates go up to 4%, your monthly payment will go up to $1,432, a difference of $135 a month or $1,620 a year, and $48,600 over the lifetime of the loan, according to LendingTree. So we really want to lock in these low interest rates. Although it can take time to do this with your mortgage broker, nowadays there are ways to apply and your application gets sent to multiple different loan officers. So you have your choice of finding one that works for you and works for your financial situation, your tax return situation, your income situation, whether you're self-employed, etc. So don't assume that you can't qualify. Go out and check and see, because chances are there is someone who wants to give you a loan. The article says, fortunately, there's still time for refinances with good credit to get a rate below 3%, even if those days are numbered. Borrowers who are refinancing and have good credit can expect to find annual percentage rates around 2.65% for a 30-year fixed-rate refinance loan and 2.35% for a 15-year fixed-rate loan, according to LendingTree. It goes on to say, once the Fed fund rate does rise, the prime rate will as well, and homeowners with adjustable rate mortgages or home equity lines of credit, which are pegged to the prime rate, would also be impacted. But there is a silver lining. Because interest rates are likely to decrease demand for new housing, would-be homebuyers might find themselves with a greater selection of homes to choose from in 2022, Channel said. And even at 4%, rates are still historically low. So beyond this article, people have asked, is hyperinflation here to stay? Is this a trend that's going to continue? And my sense on that, and through my research, my conclusion is a lot of inflation right now is really due to delays in the supply chain, backed up cargo ships, and computer chip shortages, etc. There's a lot that's not moving through the economy right now. So a lot of things we just can't get in inventory, and that's causing prices to rise. We've all heard about lumber and coffee and metals prices. There's all kinds of things that have been escalating in price, and even food has been shrinking in size, but the prices have been going up. The problem is that raising interest rates is not going to solve that problem. It's not going to help the supply chain. It's not going to stop shortages. And we really need to get things flowing again, and interest rates really aren't the answer to that. It's more about supply chain management and supply and demand. We also have an issue because our currency is being debased. We've got 40% additional currency in about the last 18 months, and that means that our currency is losing value, and that's causing some of this inflation too. Once again, interest rates are not going to be the solution to currency losing value due to having too much supply. So I do think in 2022, we're going to see some of this inflation get solved as the supply chain opens up and as some of those shortages work their way through the system. That's the good news. How you can prepare yourself is to work on some alternatives to being in cash, whether that's being in precious metals, or whether that's being in mining stocks, or whether that's being in cryptocurrencies or real estate. I think those are all good solutions to a currency that has increased its supply so much that it's starting to have repercussions on pricing. Combine that with the strategy we just talked about, which is to lock in low fixed rate mortgages, fixed rate interest rates on any of your loans that you're borrowing, whether it's a car loan, a business loan, a school loan, etc. Get those low rates locked in, get some inflation hedges that I just mentioned in your portfolio, and you'll be taking a proactive approach to dealing with rising interest rates and transitory inflation. I do think we're going to see more inventory in the housing market in 2022. And as I've reported before, more people seem to be planning to put their homes on the market sometime around March to June of next year. So I think the second quarter in particular, we will start to see more listings added and have housing come a little bit more back into equilibrium as well. So that gives you a really good plan for how to prepare for 2022 and how to deal with rising interest rates and transitory inflation. If you aren't well versed in cryptocurrency yet, check out my new book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. And once you've read the book, if you leave a book review on Amazon, you'll be automatically entered into a drawing to win an autographed copy of the book, $100 in my favorite cryptocurrency, XRP, a half-hour wealth mentoring session with me, or a lifetime membership in my private investing circle, the VIP Experience. For anyone who's already left a review, thank you so much. I really appreciate that. And if you've read the book and haven't left a review yet, I hope you go to Amazon and do it. And we'll get you entered into that contest. The drawing will be on January 17th, where I'll announce the winners here on the podcast. So be sure to tune in on January 17th to see if you've won. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.